What is going on, ladies and gentlemen? Welcome back to the channel. Today we're going to be talking about some very important news that we just got wind of that's going to make a huge difference for your pocket and mine. Actually, it's going to have a massive effect or impact on stocks, and this is exactly the news that I've been waiting for. This is probably the news that you've been waiting for, whether you know it or not. Anyhow, we're going to discuss it in this video. You may want to stick around, because you're not going to want to miss this, and we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to another video. I'm so excited to be talking to you about this major news that just came out today, about an hour ago, maybe just a little bit longer. But anyhow, I think I did a pretty darn good job getting it to you in a timely manner. So what we're going to be talking about here is the stimulus. The stimulus just passed. And what exactly does this mean for stocks? What does this mean for the stock market? Does it mean that the correction is over? Well, I'm going to be telling you all about that right now. I'm going to be telling you all about how to play this and how to use this news to put more money into your pockets. So perhaps the most important thing that we need to discuss today is what's included in the stimulus package and why it's so important. But we're not going to. And the reason for that is because I've already done so in a separate video, which you can feel free to check out if you want to. But I imagine some of you already know what's included in the stimulus package because you've been keeping up with it. But if not, look at the upper right-hand side of your screen right now, and you will see that there's another video, but don't watch it till after you watch this one. In this video, we're mainly going to focus and concentrate on how to play this news, how to make more out of less, essentially. And that's my goal today. That's always been my goal, and that's always my goal in most of the videos that I put out. But I know that some of you aren't going to be familiar with some of the methods that I'm going to be talking about. I don't want you guys to sit here and say, oh, well, I don't know nothing about this. I'm not going to do this. Listen, if I'm telling you about this, it's because I'm trying it myself. I'm actually not trying it. I've been using these methods. So if I'm telling you about them, then obviously I've done them before. Now, let me just put my disclaimer in here very quickly. I'm not a financial advisor, so this is for entertainment purposes only. But you should always do your own due diligence anyways. However, I'm telling you exactly what has worked for me in the past. I'm telling you what I think will continue to work. So pay very close attention, because this could be easy money for you right here. So we know that the market has corrected, perhaps even crashed, depending on what sectors you're in. If you're in some sectors, you may have experienced zero pain. You may have experienced some gains, while the rest of us have experienced a lot of pain. But remember this: where there's no pain, there's no gain. Who said that? Well, it was me. I said it right now. So here's what we're going to do. Number one, we're going to be talking about stock options. Now, before you freak out and tell yourself that you can't do it, let me just tell you it's very easy. It's the same as trading stocks. There's really nothing to it. I'm not going to be asking you to trade options. Well, at least not in the short term. I'm going to tell you something very simple and basic that you can do in order to capitalize on the news that we received today, and in order to turn less into more, okay? Do you like turning something or nothing into something? Well, then this channel, this video, all of that is for you. I'm trying to teach you how to make more money. So before you go whining and complaining about how you don't know anything about trading options, I'm just telling you the very simple, the basics, essentially. Now, options trading is very complex. Normally, I tell people to stay the heck away from options because it is very easy to lose money. But in the way that I'm going to tell you to do it today, chances are that it's going to be very unlikely that you will actually lose money. Now, you are going to act fast, and by that, I mean when you see that you have a profit, an unrealized profit, you're going to realize that profit. Now, what exactly does this mean? Well, an unrealized profit means that you're up in your account, but you haven't yet sold, which means you haven't pressed that sell button to claim your profits, to realize them. So you're going to realize them if you are a trader that's not familiar with trading options, basically, because it does get a little tricky. But in this situation, I think this is the perfect time, based on my beliefs and where I see the stock market going in the future, for you to capitalize on trading options. Now, what I'm going to be telling you about essentially today is how to use less money to make more money. You're basically going to control more stocks with less money. Now, who is this video for? Well, if you're heavily using margin and you need to sell some stocks, perhaps at a loss, that's not always a bad thing. We're going to discuss that in just a second. But if you have no choice and you have to sell while you are down, well, you know, your account may not be looking very appealing for the time being, or at least in the short term. So I'm going to tell you how to fix that, because, you know, long ago when I first started trading stocks, I was in this same situation. I was in the same boat as you. Okay, let's say you had 100 grand and you lost 30 grand, or let's say you're down 30 grand, and this doesn't necessarily mean you lost it, but you're down, so you are having a hard time selling, but you're also heavily using margin, which means that you're taking on a lot of risk. Well, we want to minimize your risk, and we want to use the little that you have left in order to get that money back into your account. And this is exactly what I'm going to be talking about today. So, put yourself in those shoes. You know, let's say that you were heavily margined, you were up like crazy, then this thing happens. Well, what do they always tell you not to do? They tell you never to pull out. If you never pull out, that's always a good thing if you're using your own money. However, if you're heavily margined, then it's probably wise to pull out, because we can't tell the future. We don't know what's going to happen. And basically, you could lose your entire account or a significant portion of it. And anytime you're at risk of losing what you put into your account, that becomes a problem. So here's how we're going to play this. Here's how we're going to play that stimulus news. Well, by nature, we know that this stimulus news is bullish. However, we did see a negative reaction when Powell spoke here the other day. People reacted negatively because they're afraid of the high inflation. We do know that the market is forward-looking, so we do know that perhaps the market is trying to price in that high inflation. So if you were in penny stocks, growth stocks, any stocks related to what I was just talking about, then you probably see that your account is down significantly. Why is that? Well, because these growth stocks, and especially stocks like NIO, which in my opinion is a massive opportunity for anybody that's got any extra money right now. However, you know, unfortunately, the company isn't profitable yet. So even though in the future we know where this company is going, in the short term, you know, it's going to be painful trading it. So if you're heavily margined in stocks like NIO, or in penny stocks like TRXC, or perhaps Check, some of my favorite penny stocks there that I'm talking about, even Sensio, all of those are companies that we pretty much know where they're going to go in the future. However, right now, at this very time right now that I'm talking about, they're worth less. Not worthless, but worth less, and that's because they're not profitable yet. So, how do we take advantage of these stocks? And let me correct myself very quickly. Check, which I just mentioned, you will not be able to use this method for Check because, unfortunately, Check does not have stock options yet. But stocks like Check and even TRXC, NIO, other stocks that are similar to where they're not profitable yet, but it's very obvious where they're going to go in the future. Any stocks that you really believe in and you best have done your due diligence before trying this method here. But stocks that we know that, they've got a very high, the probability of them being successful in the future is extremely high. It's perfectly okay to use this method that I'm going to tell you about on these types of stocks. This isn't a method that you're going to want to use on just any stock, even though it may play out in your favor. I just wouldn't risk it. Minimize risk. That's the number one rule. So let's get right to it. And by getting right to it, of course, I mean we're going to talk about it. So today we're going to be talking about leaps. But what exactly is a leap? Are you going to be jumping up and down? No, I don't think so. So let me just get right to it and tell you what a leap is. Well, LEAP seems to be an acronym, and it stands for Long-Term Equity Anticipation Securities, if you're saying leaps, but not just leap. Okay, so these are publicly traded options or options contracts with expiration dates that are longer, typically than 1 year. And some of you bozos thought that you actually got me, because y'all were like, well, he said this is an acronym, but there's no P. Well, the P is for publicly traded. I know that's 2 words, but it still works. Trust me, people. I've been doing this for a long time. So what do we have here? Long-term equity anticipation securities that are publicly traded options contracts with expiration dates that are longer than 1 year, but typically up to 3 years from the issued date, okay? Or from the date that you buy it. Now, they are functionally identical to most other listed options, except with longer times until expiration, or until the expiration date. So what are some of the advantages of using a leap? Let's talk about that. Well, number one, you've got the ability to use less capital when compared to owning the actual stock, which also means that you're going to lose a lot less money if you're wrong. But typically, as long as you're holding, you're not going to lose money, maybe on paper. But if you hold, chances are you're going to win and not lose. So using a long-term time frame pretty much allows you to ignore the short-term volatility of the trade. So here's another thing to know. So some stocks, for example, NIO, the premium, which is what you're paying, that's actually known as the extrinsic value on these options, which is what you're adding on top of the price tag of what the share would actually cost you, or each share individually would cost you. Well, those are going to be more expensive on stocks like NIO, on stocks that are generally more expensive, but stocks that most people generally expect to be successful or more successful than other stocks. But you can buy a contract or a leap contract on some of these penny stocks that a lot of you have been holding. Only do this if you really believe in the stock. But anyhow, you can buy a contract on those, and those are going to be pretty cheap. The premium on that is not going to be so hefty because the market makers or the market isn't really expecting much out of these stocks. They haven't proven themselves. There's more risk involved in those stocks than there is in a stock like NIO. So you're going to pay more for the stocks that are expected to do better than the ones that aren't, if that makes sense to you. So anyhow, while you digest this, let me just say one thing. To give you an example, and this is one of the benefits of using these leap options or long-term options, is because you control more shares of stock. You're still going to make the same amount of profit as you would holding the shares, except you're not having to raise as much capital. So let's say, and this is just a use case, okay? Let's say that you were holding a whole bunch of shares of different stocks in this market environment that we're seeing right now, and it went against you. So now you're kind of screwed, or at least you're thinking you are. You're thinking you're going to have to sell off a bunch of stock in order to not get a margin call. Well, think again, my friend. I mean, well, you are going to sell your stocks. Don't get me wrong, but here's what you can do if you're one of those people like me that just can't part with your stock, and you're like, no, Mr. Stock, you can't go. I can't let you go. You remember the Titanic, where he was like, I'll never let you go. Or maybe the chick said that. I don't know. That's not important. What we're focusing on here is stocks in the stock market. So if you were to liquidate your shares of stock, of course, you'd have a lot more capital, And you can put that capital into stock options, but you don't have to put as much capital in there if you're using options. So the same amount of money that you're using to buy NIO shares, you could use that on leap options that are 3 years out, or at least 2 years, and control, okay, let me say that correctly, and control 3 times the amount of stock that you are by just buying the shares, and make just as much money on each of those leaps as you would by owning those 100 shares of stocks. So, for example, with NIO, and this is at the time of the recording, so it could change by the time that the market opens on Monday, but this is just to give you an example. So at the time of this recording, NIO is trading at $38.80, okay? So if you were to buy 100 shares of NIO at $38.80, and this is assuming that my math is correct, I think that would cost you somewhere in the ballpark of around $3,880, and that's just for 100 shares. But if you went out to the June 20th, 2023 stock options with a $50 strike price, guess how much that would cost you to control 100 shares of stock? Well, it would cost you $1,393, okay, or at least that's how much they are priced right now. So for 300 shares, or to control 300 shares, it would cost you roughly $4,179. So compare that to just 100 shares of stock that you would own. Well, that's $3,880. Well, you're looking at nearly 3 times, or controlling 3 times as much stock for almost the same amount of money. There's maybe like a $300 to $400 difference. Don't blame me if my math is incorrect, because I know you got a calculator both on your phone and probably in your pocket, you little nerd. Anyhow, here's what strike price means. Here's what I'm talking about. Well, the price of a stock, let's say, for example, it's $40. Let's say that the strike price on the options is $45. Well, if you're buying the 45 strike call options and the stock only costs $40, then you're not in the money. If you want to be in the money, the price, or the share price, has to match up with the price of the option. So if it's a $40 stock, then the strike price that you want to go for, if you want to be in the money, should be $40 or less. If you want to be deep in the money, then you would buy something like the 35 strike calls or the 30 strike calls, you know, something like that. I hope it makes sense. If not, ask a question down below in the comments and I'll answer it very quickly. In the money would mean you buy a $38 strike, or maybe like a 35 or a 30. All those are in the money. But an out of the money strike would be like $40, because NIO is not trading at $40 right now. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe, because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.